Hi, I'm Jared Nelson from the Investing Channel, and welcome to The Spill. We all know there's a shortage of, well, everything, and it's helping send chicken prices to their highest levels in years. That's helped poultry producer Pilgrim's Pride Corporation hit its highest revenues in a decade, along with better gross margins year over year. Yet the stock isn't priced like it's doing particularly well. In fact, at just 12.67 times forward earnings, it's only slightly more expensive than competitor Tyson Foods, who we previously covered when the stock was around 70 bucks. It's currently trading around $90 about now. But Pilgrim's Pride's stock isn't well loved. You need look no further than the search results from our financial pros on farm product stocks to see how much less interest it garners than similar companies. Yet there might be a reason Pilgrim's Pride could fly ahead of its peers. Although feed prices, input costs for the company, have increased, the vertically integrated supply chain has helped the company manage those costs. Like many meat producers, the company struggles with labor shortages created or exacerbated by the pandemic. This problem is expected to weigh on earnings for the next several years. Lastly, we want to point out that the company filed for bankruptcy back in 2008. Looking at the financials, Pilgrim's has managed a healthy 8.13% 5-year revenue growth rate through 2020. However, its margins have compressed since 2014 as chicken prices fell off. Using adjusted EBITDA, we get a margin of 9.1% and 6.5% for the 9-month periods ending in September of 2021 and 2020 respectively. And outside of litigation issues, the company earns about $2.29 per share in earnings annually. Moving to valuations, it probably helps to compare against the firm's competitors. To help us see whether Pilgrim's offers good value, we want to throw it up against Tyson Foods and Sanderson Farms. Now, even if we use the adjusted EBITDA margins provided by management, Pilgrim's still comes in worse than the other two companies. It's also a bit concerning that the gross margins are so much worse than its peers and have been for several years now. The good news is that management is keen on correcting that. But when it comes to growth, Pilgrim's does a pretty good job. In our opinion, this is a 9 out of 10 opportunity. Not because the stock is doing particularly well, but because its downside is priced in. But if management is able to turn things around, there's plenty of room for upside potential. Click and subscribe to the Spill newsletter to get the full breakdown.